Utility stocks are known to be safe dividend payers. In this video, we're going to be talking about two undervalued utility stocks that have been paying their dividend for over 30 years and their dividend yields hovers around 4%. So let's get into it. The first company for us to take a look at is called Northwest Natural. It is traded on New York Stock Exchange with ticker symbol NWN and has a dividend yield of 3.87%. Northwest Natural Holding Company, through its subsidiary Northwest Natural Gas Company, provides regulated natural gas distribution services to residential, commercial, industrial, and transportation customers. The company has a market cap of $1.53 billion, making it a small cap at this time, and it has a beta score of 0.15. Beta is a measure of volatility, and a beta score of under 1 suggests that the stock is less volatile than the overall stock market. In this case, given that the Northwest Natural beta is only at 0.15, it suggests that the stock is quite less volatile than the overall stock market. Northwest Natural was founded in 1859 and is headquartered in Portland, Oregon. Looking at other key metrics, in terms of the payout ratio for Northwest Natural, it has a payout of 70% and its forward payout ratio is at 75%, both of which indicate that the payout ratio is at a low level for utilities, suggesting the stock has a ton of room for increasing its dividend for the years to come. You'd also notice that Northwest Natural has been paying its dividend uninterrupted for the past 66 years, which is just remarkable. During the recession years of 2007 and 2009, the sales for the company was down by 21.8%. Although it is disappointing, it is definitely way better than that of the overall other companies in the stock market in S&P 500. And the stocks during that time frame was down by only 10%, which is way better than that of the negative 55% return for the S&P 500. You'll also notice that the company has increased its dividend year after year in all those 66 years that it's been paying its dividend. Northwest Natural does pay its dividend quarterly in the months of February, May, August, and November, and currently it has an annual payout of $1.93. Looking at valuation metrics, the current dividend yield of 3.87% is 18% above their 5-year average of 3.28%, suggesting that the stock may be undervalued. Similarly, their forward price to earnings ratio of 19.3 is below their own 5-year average of 26.3. Looking at the price range for the stock in the past 1 year, the last trading price of $49.82 is somewhat in the middle of its 52-week low price and 52-week high price. Next, we're going to take a look at a number of additional financial metrics to better assess the company and stock and have a better gauge of where this company stands at this moment. The first metric to look at is their total sales, as shown on the graph on the top right side. And you notice that the last 12 months, the company has been reporting $827 million in total sales, which is the highest that they've had reported in the past 10 years, with the only exception being in 2011. The return on equity, which is another important metric, and here for utilities companies, we'd like to see that being above 9%. In the last 12 months, they have hit that standard and they are showing a return on equity of 10%. In terms of outstanding shares, ideally we'd like to see this number declining. However, for utilities companies, it's a unique sector, and here many utilities companies actually rely on issuing equity to fund a portion of their gross expenditures. And many projects as a result of that are guaranteed a rate of return by regulators that exceeds their cost of capital, reducing as a result the risk and helping earnings per share to grow. In this case, in the last 12 months, we are seeing 30.7 million outstanding shares. And lastly, if you look at the earnings per share growth, well, the last 12 months, they had a 33% increase. The next 12 months, based on the estimates for earnings per share, they are showing a decline of 6%. Let us also take a look at the stock performance in the past 1 year and the past 5 years and see where it stands. Looking at the past 1 year, the stock was up by 14.56%, and in the past 5 years, the stock was down by 14.98%. This, of course, does not take into account the dividend that the investors would have earned on this stock and they're holding to this dividend-paying stock. In terms of analyst estimate on Yahoo Finance, the 1-year price target here is at $54.63. The analysts on TipRanks, there are two of them covering the stock, with one of them have a buy rating and one of them have a hold, giving the stock a moderate buy with a price target of $62.50. And if that holds true, that gives the stock an upside of 25.45%. Lastly, if looking at the fair valuation based on analysts on Simply Wall Street, you'd see that the fair value here is estimated to be at $54.03, suggesting that stock is undervalued by 7.8%. Before we move on and take a look at the second undervalued utilities stock, I have a big favor to ask you. I've put a ton of time and effort to put this video together, and I appreciate it if you can give this video a thumbs up and subscribe to our channel for more investing videos. Thank you. The second utility stock that is a dividend paying company is South Jersey Industries, with ticker symbol SGI, traded on New York Stock Exchange. South Jersey Industries is a publicly held energy service holding company for natural gas utility and other non-regulated companies. Furthermore, the company owns and operates rooftop solar generation, among others. The company has a market cap of $2.67 billion, making it a mid-cap size company. And the stock, in terms of its volatility, has a beta score of 0.28, suggesting it to be very low volatility. What's quite promising is the dividend yield here at 4.76%, which is just remarkable for dividend investors. Looking at a number of additional key metrics, the payout ratio currently is at 69% and the forward payout ratio at 75%, which is considered to be still low for utilities companies. During the recession of 2007 and 2009, the company's sales was down by 16.8% and their stock return was down by 9%, both of which better than the overall performance of S&P 500 at the time. The company has been paying its dividend uninterrupted for the past 30 years, and of those years, the past 21 years, they have increased their dividend year after year. South Jersey Industries pay its dividend on a quarterly basis in the months of April, July, October, and December, and currently has a payout ratio of $1.24. South Jersey Industries' current dividend yield is about 27% above their historic 5-year dividend yield, indicating that the stock may be undervalued, unless you believe that the company's outlook has weakened. It is also worth noting that their forward price to earnings ratio of 15.8 is well below their 5-year average of 20.9, which sometimes could suggest that investors are becoming pessimistic about the stock. But let us take a look at a number of additional financial metrics to better assess where we stand. Looking at the earnings per share for this stock, the last 12 months, they had earnings of $1.73 per share, and in the next 12 months, they are projected to have $1.65 in terms of EPS. While it is showing a decline compared to the last 12 months, it is somewhat better than that of the previous years in the past 10 years, with the only exception being in the last 12 months and 2020. In terms of outstanding shares, well, we like to see this number decline. We talked about how in utilities sectors, the companies tend to issue new shares, and in the last 12 months, we are seeing that kind of increased overall, with the last 12 months having 107 million outstanding shares. In terms of total sales, though, we are seeing that continuous nice increase. It's not always steady. There are a little bit of ups and downs, but in the last 12 months, they've had the highest sales reported with $1.84 billion, which is the highest in the past 10 years. Lastly, in terms of return on equity, would like to see that at 9% or above for the utilities company. In this case, the last 12 months, they are not meeting that mark and they are reporting only 4% return on equity. While this is not ideal, it is still worthwhile mentioning that this is a solid dividend paying company for 30 plus years and increasing their dividend year after year for the past 21 years. So for dividend investors, that is kind of a reassurance in that sense based on that historical dividend payments. Now let's take a look at the stock return for South Jersey Industrials in the past 1 year and the past 5 years. The stock for SGI has been up by 18.5% over the past 1 year, but in the past 5 years, it's down by 18.86%. This does not take into account the dividend paid to investors at this time. Looking at the analyst estimates, there are 4 analysts on TipRanks covering the stock, with 1 of them have a buy rating and 3 of them have a hold rating, giving the stock overall hold with a price target of $27.25 with an upside of 4.69%. Analysts on Yahoo Finance have a price target of $28.78. And lastly, analysts on Simply Wall Street have a fair valuation of $19.96. And according to them, this stock is overvalued by about 30%. Well, there you have it, folks. A quick look into two high dividend paying stocks in utility sector that have been paying their dividend uninterrupted for 30 plus years, and their dividend hovers around 4%. I hope you found this video beneficial and you gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, please subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, whether it's investing in the stock market, cryptocurrencies, and real estate, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.